Good morning, everybody. Glad to be back. Hope you enjoyed our forced day off. All right, so here we go again. Top of the range, bottom of the range. Where's my mouse there? Bottom of the range, top of the range. Now we're going back down to the bottom of the range. So pretty big move overnight, because there's going to be a pretty sizable gap down, for the S&P, the Dow, the Qs, and such. Morning. And typically with gaps of this size, you're not going to get the markets turning much. They typically, you would think maybe to fade it, but it's not at support. So that's not in my mind at this point. I have to look at the Dow and the Qs to see if they're at support. Most of the time when it comes to index futures, the thought is to fade the gap. Whereas with stocks, the tendency is more to go with the gap. But we do take into consideration how the gap is occurring, meaning, for example, a gap up after a reversal like this one, I would go with that regardless. And the same with a gap down from, say, the top here, similar to some of the stocks that we saw last week that had run up to areas of resistance and then gap down, and those would go with, and those are great type of gaps to go with. Now, this one is from a continuation pattern. So again, this is a 24-hour chart since it's the futures, and this trading yesterday, where the markets were closed, futures were trading. They just had this attempt to go up and then it came back down again. So if this wasn't a day where the broader markets were closed and we see this type of a pattern with a wide range bar, a stabilization, and then break, well, that's a 1, 2, 3 continuation pattern, and you go with that. Now, this is going to be opening down here. It's not quite close to the support, so we're in limbo here as to what to do. Let's go look at the intraday chart. So you can see an X-ray into what's happening over here when you drop down to a smaller time frame. So we are into a little shelf of support here, and we can see that's where it's stabilized. Could it make a higher low? Absolutely, it could, rather than coming all the way down here. All right, so support where resistance is an area. This could be a jiggle down here, what's going on right now, and then head down to that next level where, again, buyers are going to step up when it gets there. The question isn't, will buyers step up when you see a reference point of support? The real question is, and it's an unknown, how many will step up? Meaning, can they really turn things around? So the same thing here. They stepped up, but can they really turn things around? Well, they couldn't. They attempted and it failed. But this created a support area. And so this is one of the concepts that we go through in MTS. We've got existing support, and then demand can create support. So when this became a swing low, it created support, and traders traded against that reference point. Very weak attempt to move up here, but it could be a process of just chopping back and forth that eventually maybe it goes higher. And if we should see that, well, then we might look for stocks that are showing relative strength. We could buy the S&Ps for a day trade. Once we see the evidence that prices are actually holding. On the other hand, if they chop here and they start heading lower, unless you're trading this contract, this ES contract, it probably doesn't make a whole lot of sense to short, because the reward to risk just isn't going to be there. Whereas if trading the futures contract, we could trade it from even a 2-minute chart or whatever time frame it sits up on, and trade that, because the leverage, it could make sense. But this is where we're at right now, gapping down to this level. It's a big gap historically. Gaps of about 1% are big, and this is bigger than that. So we'll see how it shapes up. Let's look at the Qs. A little bit higher. If they didn't get up to their respective resistance area to the top of the range, will they get down to this part of the range or make a higher low? Now, with this kind of a pattern, I would think it's going to make a lower low just because that's what's going on here. It's a series of lower highs and lower lows. So the thought is that's what's going to repeat. That, as we always have multiple scenarios, whereas could this, and this could be, I force myself to come up with things that are probably not in alignment with what's happening in the moment, but that's still a good thing because a lot of times that is what happens. So what I was going to say is, could this be part of a head and shoulders bottom? We've had various attempts to make bottoms, whether it was this one, maybe this was it, or this was a W bottom right here, and then it faded. Can this be a higher low? Will this be a W? I don't know. This is what I've coined the schizo market, Mr. Schizo, where you've got these big, relatively large moves, retracements. This is a pretty big retracement from this high to this low and back here again. I think I'm eyeballing it. Probably looks like about 80+% or so, which often sets up a higher low, a depth of that far. Whereas the Dow the S&Ps were 100%. And now they're going back down to the low, which says, hey, trading range. And while in the moment, this negative day, right, Dow is down, what is it now, 447 points before it was just over 500. You would think, it's going to go down there and break the low. But you get this kind of big type of move like that, and it may not necessarily follow through. So don't be so quick to think, it's going to go lower, even or breaking the low. We'll see as it sets up. Let's clear this. And here's the Dow, similar to the S&Ps. They come up to the top of the range here. Looks like it's going back down to the bottom of the range. So now we can just drag this down here. And you can see our trading range that's going on over here. So pretty messy, erratic. Put it in the context of what's happening. And so when I see a mess like this, which is like, okay, I can see it's a range, but how do I deal with such a thing? Should I deal with such a thing? So when things are erratic, price action is erratic, the thing to do is to compress it and see if it makes sense. It may be a head and shoulders, Alex, the same as, the other. Could it be a head and shoulders top? It could be. So we don't know because by definition, a head and shoulders pattern, the way this is formed, it's not like it's coming after an extended move up or down. This is a trading range. It's a wide, whippy trading range. Could it be a lead to the next leg to the downside? Absolutely, it could be. And as we took note of last week, our heads up indicator market gauge that we finally called the idiots went all into their eyeballs on call options intraday. I think the level was in the area of 0.6. And even as the market was selling off, it was 0.7. They just didn't believe that there was any way possible this market could go lower. And that didn't mean it was going to drop like it has. But what it told us is that there's risk for longs here. And when I saw that, I said in the room, this market is not going up, not under this condition with this reading in this market internal gauge. And obviously, in retrospect, it didn't. Now, it didn't suggest market was going to go down 700 points and then 500 points. But it told us, don't get in front of this on the long side. That's stupidity when these wrong way traders historically are on the wrong side of things. Now, this weekly chart is just, as you can see, up, down, up, down. What do you do with this? You stay away from it. And, unless you can go down to smaller time frames and trade it if that's part of your trading plan. Otherwise, you stand aside and you wait for some pattern to form that suggests, hey, I recognize what this is. The direction here is pointing in one way or another, and something that we can take advantage of, rather than, oh, here's the strength, let's buy it. Here's the weakness, let's short it. And then it's back in your face again. So we want to, of course, avoid that at all costs. I'm just going back to the cues because we've got the same thing. Here we had a break to the downside on the weekly chart, but the momentum slowed. One small indication of possibly a bottom forming. This had strong momentum. It retraced, and when it broke lower into this support, it didn't go that far. Remember, when this occurred, what I talked about was the fact that this potentially could be a measured move lower. But I said the Dow and the S&P didn't support that. So I didn't think that was likely. And it didn't happen. But it also didn't suggest a reversal bar to the upside of this size. And now we're going back down. What does it mean to compress the chart? Yeah, exactly, Tony. I'm just using different terminology rather than saying I'm going to a higher time frame. So by saying compress the chart, it speaks to relating that concept. If you're an intraday trader and your 5-minute chart looked like that was a big mess, compress it to a 15-minute or an hourly chart and see if it makes sense. So this is what we do, whether it's a swing trade or a core trade or a day trade. If you typically trade from the 5-minute chart, as I do intraday, and I use the hourly chart for a bias of direction, if the 5-minute chart becomes all whippy and erratic, I'll move it to a 15-minute chart to see if it makes sense. If there's momentum and certainty in the way prices are moving, I may move down to a 2-minute chart to get closer to the action. In other words, I'll expand the data to see more information as to what's happening. So these price patterns are happening in all different time frames. You have to decide how much detail do you want to see. So the trader that is trading from a 1 or 2 minute chart all the time is going to see much more information. He's going to press the button a whole bunch more times. He's going to create more commissions. So he better have a damn good batting average in what he's doing. Otherwise, the commissions and small losses, theoretically small losses from a small time frame, are going to destroy him. All right. Bonds. Let's expand the data. Right. So here we've got a big wide range bar to the upside. And let's see what the daily chart looks like. So I got a little blip in my internet connection here with one of my custom scripts here. Bonds continue to move up in inverse of what's happening in the stock market. That does happen. And this is a bad sign, meaning as bonds move up, interest rates are moving down. And I promised last week we'd take a look at the yield curve, looking at long-term interest rates versus short-term interest rates. And as of the other day, it was not inverted. But as long-term interest rates come down like this, and having short-term interest rates having risen for a very long period of time, much longer than the Fed has been moving them up. Hold on a second. And let's do this. And you can see how long. These are 3-month yields. They've been moving up since 2015, where they came off at the bottom. So as this is moving up, and you can see that it's at 2.365. And if we go to, this is the 30-year at 3, what we want to take note of is when this drops below, or the lower, the shorter term ones rise above that, you get an inverted yield curve. And that has preceded a recession and a big bear market, not just a whippy bearish trading range. type of market. And it typically will lead for months before you'll see that negativity in the equity markets. Reading question here. You mentioned that when the yield curve is inverted, we need other market to confirm. Can you please elaborate? Yes. So like you're saying, oil could be one market. That's the intermarket analysis part, Joan. And oil has been declining. And I mentioned this last week, the way oil has had this drop, that is negative. So when we look at interest rates, yield curves, the price of oil, it's a measure of what's happening in the economy, because this is based on truly supply and demand, whereas oil goes up when there's demand for it and down vice versa. So if there is a small demand, let's just say who's ever selling here, Saudis, whoever selling, so that brings in supply. Well, if there was still strong demand, it wouldn't go down. Someone would absorb that demand. If there's a demand for money, interest rates go up. Right? So while the Fed can influence on a short-term basis, short-term interest rates, long-term interest rates are affected by a demand for money. So if there's a lack of demand for oil, there's a lack of demand for money, that is suggestive of a recession that's coming. Now, the yield curve inverting is confirmation historically of that actually happening. And then in turn, what should happen is the transportation index should have topped out and going down. So when you think about it like that, it's really just common sense. You're just putting together the pieces of what happens during that time. So here you've got the transports last week going down. They were showing relative strength in the face of that drop in oil prior to that. So why were the transports showing relative strength? And now all of a sudden they're dropping when oil is down so much. Was it just negative market? Is it really the transports now following through and this was a fake out kind of a move? We don't know yet. Gathering information still. And that's why we have this uncertainty that's going on right now. And what makes a trading range, wide whippy trading range, is caused by uncertainty. Is it really a slowing economy when all the numbers are saying things are so fabulous? Something's going on out there that is creating this uncertainty that isn't so obvious at the moment. So we're waiting. Now, if everything is slowing down, and why is gold going up? And is it just an inverse relationship, or is it inflation coming? Whereas, you've got the president saying, hey, Fed, are you idiots? You shouldn't be raising interest rates. You should be, stopping or lowering interest rates. And so we've got these cross currents going on again, which leads back to uncertainty about what's going on right now. So we have to deal with this as investors and traders and read these tea leaves, so to speak, and make a decision as to, do we want to stand aside while prices are, traders, investors are trying to figure out what's going on here with this Christmas tree, right? Appropriate type of price action at this time of year. We call this a Christmas tree, red, green, red, back and forth. So knowing where we are right now, and with that knowledge, making an informed decision to either stand aside or participate in lower time frames, or to shorten our bias as to our holding periods, makes a whole lot of sense versus others that may approach the market in the same way and get beat up very badly. Well, gold has different pulls on it. So at this time of year, there's a demand for gold just because of holiday time, people buying jewelry. So that does have some effect on it. So there's a seasonality to gold right now as well. We'll see what happens next year. We're almost there as to how these pieces that I'm talking about begin to come together. And, that's what we do. Sometimes there are points in time when what we're looking at doesn't make sense. And that could lead you to think, well, maybe you should read a book or you should go find out why it doesn't make sense. Well, I've done all that years past. And the bottom line is with everything that I'm telling you about right now, the bottom line is if you look at the chart and you've got overlapping bars like this, whipping back and forth like that, this doesn't make sense to anybody. And that's what the chart is communicating to us right now. This is confusing. So if you think that, okay, there's just something that you don't know or we don't know, there's the world out there right now that's trying to figure this out and scratch their heads, because when the majority know, or let's say the big money knows, it trends like this in a pattern where the ranges are relatively the same. The bar to bar ranges are relatively the same. And when we might say, oh, everybody now knows, and they join the party, the ranges expand. And then at some point, momentum stalls like this, and it begins to reverse. And then as it comes down to support, things get erratic and whippy. It's like, is this a top? I'm not sure. Is this going to be a bottom here? I'm not sure. Buy here, sell there, back and forth. Who's going to win the battle? Typically, what will happen when it becomes obvious as to who's going to win the battle is this wide, whippy range will begin to contract. It'll tighten up. And then at some point, it's either going to blast up or it's going to blast down. And so we look at other factors. If it tightens up and now the yield curve is inverted at that time, oil hasn't bounced, long-term interest rates are still going down, we're going to bet on the blast to the downside. If things reverse, well, then we'll look for the blast to the upside. And of course, we're going to look at individual candles, whether there's topping tails, bottoming tails, so on and so forth. And that's what we're going to be doing today. Well, today we have a big gap down. We're not into the bottom of the range yet, which makes it difficult to determine exactly what's going to happen here. But here's your 60-minute chart. It's in a downtrend. We already covered it's getting closer to support. Maybe it's got to drop down there. And so we shall see. And Dan has typed in there different things that are open. I don't know if you want to talk, Dan, how good your connection is or whatever.
Yeah, hey, good morning, folks. Yeah, sorry, I was a few minutes late here getting the internet set up outside. And tell me if the neighbor's music is too loud. Sorry about that, but we will do our best to continue as usual. Yeah, let me look at some of those. But good thing we're very light on inventory. We, sold a lot into the gap up, tightened stops, stopped out on the back halves. So I typed in there what we have open. Remember Tesla put spread? We did. And, it was incredible relative strength. And it was one of those things, do we want to hold off because of the internals, take half? And we did it. We're fine. I'll see once the spreads tighten up where we're at, but just time decay over a couple days. We might be down marginally. Chud, we are long stock with a stop now under this bottoming tail. Moss, we have a half lot of a covered call and with a stop under here. Oh, that's getting close. Now it's an ugly wide range engulfing on the weekly. And we have a USO put spread 1050, the nines. And so it's, you know, coming in to fill the gap. That's something that we thought was very possible as a retest. So we'll just let it play out. Spiders. So yeah, the bias, I mean, we're down big gap, but let's see what's going to happen in the first 30 minutes here. If it doesn't bounce, then they look like they want to go deeper into that support level. So we'll be looking for day trade shorts. It's a little difficult getting on swings here again. I mean, these past few months, it's not been easy. So opens are very light. These semis we played well, but they all kind of gave them up. I mentioned a lot of marijuana